All right, guys. Alex and Kacy here once again.
We're back.
I have the pleasure of being joined by Bruno, one of our preferred lenders with guaranteed rate. Sit back, relax, tune in. We're going to put Ron's feet to the fire here, ask him some blazing questions.
All right, I'm ready.
And we're also going to take you guys through some properties that we toured with Ron and just some things in the market that we want to bring to your attention. So let's go.
Dive in.
So Ron, tell us a little about yourself and how you got into lending.
Sure. So Chicago native, moved when I was 7. Grew up in Hilton Head Island. So it's a little resort town in between Savannah and Charleston. So my wife says that she married a Cabana boy. Went to Emory University in Atlanta. Lived in LA for 16 years before making it to the great state of Texas in 2018. So love it here. Got into lending actually first via, I was a financial advisor.
Okay.
So I've been in personal finance for 13 years and I've been in lending for 9 years. And
Awesome.
Absolutely love it. Absolutely love it.
Awesome.
Yeah.
Well, we're excited to have you here.
I'm so excited to be here. This is the best here at Compass Studios, right?
Yeah, Compass Studios. We've renamed, we've rebranded.
All right, Ron, so we're going to kind of take you through some questions that sellers, buyers frequently ask us. So let's get to it.
All right, let's do it.
Anything new in the lending landscape as it sits currently now?
Yeah, absolutely. So, last year was obviously, a little bit of a challenge, right? You had a lot of lenders, they weren't able to actually process loans due to COVID. And a lot of the, we call it non-QM or non-qualified mortgages, a lot of the brokered channels, that really shut down, right? Jumbo loans, so anything above conforming loan limits, those actually were a little bit more difficult. Now that things are opening up a little bit, the standards have shrunk, right? So they've kind of loosened the box in terms of the overall lending standards across the board, which is really exciting, right? Also, a lot of those jumbo lenders and those non-QM lenders, they've come back into the forefront, and it's all about risk, right?
Yeah.
So when it comes to lending, it's all about risk. So when you have unemployment shooting 46% and all these crazy statistics, lenders say nope.
Not today.
Right? But the silver lining with all of that was that the Fed, they decided they reduced rates down to 0 last year. And on top of that, they went in and did asset-backed security purchases, and they bought $80 billion when it came to mortgage loans as well as treasuries. And that really supported the market, right? So that's what's really key is all of that buying. So what's happening right now in the market is they're starting to scale that back, right? Or tapering. They call that tapering in the market. So now instead of buying $80 billion, they're going to start cutting that back. And that's why you're seeing rates kind of tick up a little bit.
Okay.
And that brings us to our next one. I know you wanted to get Ron's take on interest rates going up and things of that nature. So I'm curious, your take on that, Ron, and I know our buyers are definitely interested in that.
What average interest rates are you seeing right now as we're kind of creeping back up?
Yeah, so right now, we're right into Q4 of 2021. The MBA, so that's the Mortgage Bankers Association, they're forecasting by the end of next year for the standard 30-year fixed. And obviously, with the caveat, there's lots of caveats when it comes to lending, and you have to give APR and all that extra information. But just based on their forecast, they're looking at about 4%.
Wow.
So they're looking at a 20 basis point increase, or basically 20% of 1%. So almost about a quarter increase each quarter as we go throughout the year. Okay. So what's key there is if you're pre-approved at a certain level and you were pre-approved at, let's say, 3.25, now all of a sudden, if you were at your limit and you don't qualify at 4%, then you need to adjust your overall schedule, right? You need to start looking at properties that are at lower price points if it means that you're going to be buying 6 months or 12 months into the future. The good news is, let's say you're out where it's a new build, right? So a
Okay.
new construction, we actually have at guaranteed rate, we have an extended rate lock option.
Oh, wow.
Right? So if you're looking at it and saying, okay, my thesis is that rates are going to go up next year and my home isn't going to be done for another 6 months to 9 months, you could actually lock in today at today's rate, and there's a whole bunch of caveats with that. But it's kind of like an option, right? You put on a credit card, you pay a little bit, and then what you're able to do is you just lock it in. But if rates go down, right? So let's say the thesis is all wrong and the MBA doesn't know what they're talking about, right? Then what happens is you can do a rate, a float down, right?
Okay.
So it's called a rate renegotiation.
Oh, wow.
So the big key when it comes to lending and when it comes to looking at rates and all of that, it's all based on your timetable. And I don't see that there's never a time to jump into the market, right? So
You hear that, people?
Yeah, I
that's
was gonna
right.
say.
Never
So
a
now
bad
is
time.
the
never
time
a
to
bad
buy.
time.
Ever.
The only caveat I'd say about that is if someone were to buy a home and then they knew they were going to be out in 2 years, right? That's where it gets a little bit iffy because now you're talking about a specific timetable,
Right.
right? So flippers in a rising interest rate market and markets where you don't have that continued appreciation and the bidding wars and everything else we experienced in spring and summer. Well, you may have some carrying costs, right? So that's something definitely to consider if you're an investor and you're doing a lot of flips.
Gotcha.
But if you're just buying as a couple, you're buying a new home, it's always a good time to buy, right?
Always.
To buy with us, though.
Yeah.
No, of
With
course.
Alex and Kacy. And Ron is your lender.
Yes.
Tell us a little bit about pre-approvals. When should our clients get pre-approved? How long does the pre-approval last? How often do you guys run their credit? Tell us a little bit more about that.
Yeah, great questions. Great questions. 90 days, right? So
Okay.
that's the number when we look at credit reports, right?
Okay.
So credit reports are good
Yeah.
for 90 days.
Oh, good, because that's what I've been telling them.
You
So
told
I'm
them the
right.
thing. It's 90 days. On top of that, a pre-approval. So once we issue that pre-approval, that's also good for 90 days.
Okay.
Right? So
Awesome.
credit 90 days, pre-approval 90 days. And as far as when's a good time to run it, it all depends on their particular time schedule.
Right.
Right? What I always do is I always offer, if someone comes to me and says, I want to buy a home in September of 2022, and they're like, I just want to have a good idea of where I stand, I will always do that because the cost to a consumer is 3 to 5 points on their credit report. Right? Because a residential credit report, which is pulling, TransUnion, Equifax, and Experian, it's 3 to 5 points. And it's considered good credit
Right.
because the idea is that the balance goes down over time,
Yeah.
right? Versus a credit card when you go to Macy's
Yeah.
and they give you all those incentives
Yeah.
and those gift cards and
you just keep
all
spending
that stuff.
and all that. Yeah.
Exactly. So it's considered good credit, so they're not going to hit you,
Okay.
right? They're not going to have that massive hit. But what's great about a baseline is it allows us to have a framework. Right? So when someone says, okay, I want to buy a home, I'm thinking $500,000 and I've got 20% down. Okay, great. So that's a loan amount at $400,000. Now, what I'm going to do is I'm going to, put together their to-do list. And I mean, our company's gotten so, just sophisticated that the bots that are out there
Yeah.
after they, do everything online, it creates a to-do list for them.
Yeah.
Right? So it's like, wow, that's just really, it's cool. It boggles my mind that it just keeps getting better and better and better and more sophisticated. But when you submit all that documentation, when I look at the income, assets, and credit, I then am able to run that and stress test it, right? And if someone's buying in September of next year, I'm not going to base it just on the 3.25 if that's what the prevailing rate is. I'm going to stress test it and say, okay, let's say worst case, maybe it's 4.5%, right? Or 4%, right? Just to make sure that we're still within that framework.
Gotcha. So I've been getting a lot of texts and emails from you about some Red Arrow program.
Yeah.
Yeah, you too?
Yes,
Okay.
yes.
What is that all about?
Well, I want you guys to know about it, right?
Okay.
I'm persistent from that standpoint. But I'm really excited about this, right?
Okay.
So the technical term is the Red Arrow Approval Express program.
Gotcha.
And what's great about it is it is a pre-underwrite.
Okay.
Right? So when we work with somebody and you have somebody, you brought them to me, I pre-approved them, we're in escrow, right? So we've already opened escrow on a new property. Well, what happens is I'm the one that locks the loan. I then send that to my processor. My processor, they then order the appraisal. They then reach out to the IRS, get their transcripts. They reach out to the employer. They get all this information and they package the whole file and get it into underwriting. Right? So that takes time. Right? So we're talking about time, and we're also talking about we talked about risk, right? We're talking about the uncertainty. So what this program allows us to do is we get to go halfway through the loan.
Awesome.
Before you even make a first offer.
Okay.
Because what happens is we take that file, it goes through underwriting, and it's the same underwriter that's going to be working on the loan, and they give us that conditional approval. And that conditional approval, that is an underwriting approval that has told the consumer that we have reviewed your income, assets, and credit, and provided that you can meet these particular conditions, then we're going to close on this loan.
Awesome.
Right?
So it's like in half the time.
Yeah.
Okay.
Yeah.
Nice.
So we're halfway through the loan process. So what's great about the program is we also give that certificate, right? So we give that to the consumer, and as we work together, what I do is I'm always following up with a listing agent, right? So you submit the offer, I follow up with a phone call, and I have my computer, I have everything, the whole file in front of me. And anytime, in case that listing agent has specific questions,
Gotcha.
right? Because you can't just, wing it,
Yeah.
and like have that listing agent say, "Well, tell me about your borrower." Oh, they're good. You can't do that,
Yeah.
right?
I wish.
So you can't quite have that, right? So what happens is, I follow up and I let them know that, okay, so, I've already reviewed the contingency windows. I reviewed the days of, how we're going to be, closing this on that particular date. And, we're direct lenders and we're going to meet all these milestones, if not exceed them. Right.
Awesome.
And that's our goal. And if they have any specific questions about FICO or, what they do for a living, all that kind of stuff, like I have that information available.
Gotcha.
Right. And what's really great about this program, it started out where it was FHA, VA, and conventional, but now we've actually opened it up to jumbo.
Oh,
so
cool.
now
Okay.
we're able to reach out to those more affluent buyers. And give them that sense.
That's great.
So, I'm working with somebody right now where, they have a $2 million loan. They want to buy this particular home. They want to be able to beat out every other offer that's coming out there. I mean, we're going to be ready to go. I'm psyched, right?
Yeah,
So,
that's exciting.
Yeah.
Awesome. Cool. Well, we definitely have to get a lot of our clients on that Red Arrow program.
Yep, the Area Approval Express.
Red Arrow Approval Express.
There you go.
Cool. Okay, so I know you guys know this, but the competitive landscape in the lending world it's pretty tough. We work with a few different lenders. Our buyers obviously come with us with their preferred lenders. But we've had a good relationship with Guaranteed Rate so far, and I'm glad that we could bring Ron on board. But Ron, for us, for the people at home, why Guaranteed Rate?
Yeah, it's a great question. So first of all, they're based out of Chicago, right? So number
Where you
one,
from?
like I'm a big fan. It's funny. I'm a Cubs fan. So when I saw, we have the Sox field, right?
Yeah.
So Guaranteed Rate Field. So I'm now a little bit of a White Sox fan.
No?
Okay.
Okay.
Yeah.
Interesting.
It's a little taboo in Chicago, I think.
Oh yeah, I know. Well, we all, everyone celebrates the Bears, right?
Sure.
Yeah.
So that's the hometown team. So with Guaranteed Rate, what's great about it is we've really invested in technology, right?
Okay.
So number one, we're gonna be the fastest. We're gonna be able to, and not just the technology, but also the people behind it, right? Because you could push a button and get a mortgage,
Yeah.
right? But what's different is you also have me behind it, right? And my team. So it's
not to cut you off, Ron, but that's a point I'd like to highlight as well, because we have so many buyers who use the iLender or buyers who want a lender that they don't have to speak to anyone. I mean, that's all fine and dandy until there's an issue, and then the issue always does come up. Something comes up, and you need to get a hold of someone. And we've seen how that can bite some of our buyers in the butt. So, again, I like the fact that someone else is on the other end.
Yeah, and it kind of reminds me of Compass in a way. We are a technology company
Right.
That does real estate, I like to say. So definitely the technology aspect with great people behind it.
Absolutely,
That's awesome.
absolutely. And we also, when obviously people have choices that are out
Right.
there. What I always like to pride ourselves on is kind of being that first stop, right? Because we have so many different types of programs, right? We have 26 jumbo lenders that are available to us, both correspondent as well as delegated. We also have a broker channel, right? So what really attracted me to the platform was it really aligned with my business, right? So when I was looking out there and seeing what was available in terms of working as a lender, my background, I came from wealth management, right? So my clients were business owners, executives, professionals, right? And first-time home buyers. Like that's my makeup. And Guarantee Rate just had all of those different lending platforms and was all geared to that. On top of that, it's also about being able to scale, right? Sure. So I mean, you have to be able to, we're all ambitious. Yes. Right? You don't want to be stuck where you get to a point and you're like, well, I can't grow anymore because the infrastructure doesn't support it. Sure. I mean, I am a tiny, tiny little fish in a massive pond. I mean, we have 2 originators this year that have already eclipsed $1 billion in production. Wow. So I've got a little ways to go.
Say we need $1 billion sales.
Exactly. But that's what's so exciting, right? And coming from a marketing background, so the first 10 years of after school, I worked in advertising and all that. I mean, it's top notch, right? So you see the ads everywhere, so that all helps support. But it's all about the consumer and also supporting the loan officer and being agent focused.
Gotcha.
So
awesome,
hopefully
agent focused. Well, thank you so much, Ron.
My pleasure. Thank you so much.
Of course. Yeah. Let's dive into some of these properties we toured. Okay, so if you haven't watched our videos of our neighborhood tours, go back and do that before you even finish this. Right now. Press pause and go back. We did 3 home tours in 75206 a couple days ago. Sure. A couple days ago, we did it with Ron, so we're going to talk about them, get a little deeper dive into the properties themselves. Yeah. So let's jump right into it. Let's jump in.
All right, first one was McComas. Do you remember McComas?
Yes.
The Tudor.
Yes.
Beautiful Tudor.
Beautiful Tudor. It's in M Streets, built in 1927, I think.
$795.
Yeah, $795. A little on the pricey side.
It was.
But
it was a decently sized home though, 2,500 square feet, 2.5. Okay. So plenty of room from that standpoint. But that style of home is not necessarily one that you and I typically go for, but I would live in that home.
Yeah, it was beautiful. Yeah. It had a lot of backyard space, which is very important in this day and age. But it was well kept and maintained and had a lot of great updates.
Which I think is huge for older homes, how the seller or the current homeowner is upkeeping a home, especially an older home. It just needs a little bit more TLC every now and then. Absolutely. But that's huge for resale because there's nothing worse than walking into a 1927 Tudor and it is falling apart.
Yeah, and you have to redo it, gut out the whole thing, and you want to be move-in ready. Yeah. And that location is awesome. The M Streets, it's full of classic Tudors, some craftsmen, some mainly Tudors, but the neighborhood itself is got a very welcoming vibe. It's very family oriented. The yards are actually a good size.
It's always desirable too.
I mean, always desirable to be that close to the city and downtown. It's a great area.
So McComas was listed at $795.
Yes.
So if we have a buyer who is okay with that price point, wants to be in that neighborhood, Ron, what's the best way that they can set up and go for it?
Yeah, so $795 is an interesting price point, especially now. Okay. Right? So I mentioned briefly that, the conforming loan limits, right? We talked about, so in 2021, the conforming loan limit is $548,250. Okay. Right? Yeah. But in 2022, it's been announced that it's going to be $625.
Nice, yeah.
So if you think about it, if you have someone that's going to put 20% down, you're almost at that limit, right? Because if you put down, I'll have my notes right here, right? So if you technically put down 21.38%, you are now in that conforming limit, right? With a $795 price point. Right? So, if I were the listing agent, I might have even priced it down to where you actually qualify with 20% down. But, that's just technical. But it's only $11,000 difference, right? So if you have that little bit more, you might be able to qualify for a conforming loan. And the reason why that's important is because with a lot of these jumbo lenders, they have additional requirements.
Right.
Tighter guidelines.
Tighter guidelines.
Yeah.
Exactly. So, there may be a lender that, when you're looking at the jumbo side, I would say on average, the debt to income ratio can't exceed 43%. But if you look at conforming, it could go all the way up to 50. So if you have someone that has a lot of assets, but they also have a lot of debt, that's where you would want to come into that particular range.
Okay.
The rates also might be better on conforming. So I like the fact of having options.
Yeah.
So that's what I noticed.
Absolutely.
Yeah.
So another point on Macamas was when we were in comps, we saw that the sales price was actually much higher than the list price average on a lot of homes.
Yeah, it was on the higher side.
We know what that spells. Bidding wars, and especially in this
Multiple
market,
offers.
that's multiple offers. That's something that our buyers, unfortunately, are privy to now in this market. But I know that can throw off an appraisal, things of that nature. Ron, is there anything that a buyer can be aware of or do in that sense, or what are their options there?
I mean, the first thing is just hire you guys, right? Because you're not gonna make them
Obviously.
overpay for something, right? That's the key, right?
That's the key.
And that's why you don't just go to an iBuyer and then just go into this blindly.
Yeah.
You have that research, right? So that's why when we were talking, I'm like, okay, let's look at those comps, and you guys knocked that report out just like that, and like that's really the key. So in looking at that report, you just saw that there was a big difference between what they listed for and what it actually sold for.
Yeah. Awesome.
Yeah.
So the next house we saw was Goodwin.
Yes.
A
Massive
home, almost 4,000 square feet.
Yeah.
Yeah, in Knox Henderson,
Yeah.
with
Bigger
a pool.
place. Yep. With a pool.
It was beautiful. It was very surprising.
Sure.
When we were on the outside, I didn't think it was going to look like what it looked like inside. So when we walked in, I was like, oh my gosh, wow.
Well, you don't realize how big 4,000 feet really is. Like,
Yeah.
that's a big home. And then the kicker was the pool house.
Yes,
Very
the
cool
pool
feature.
house, above the garage, which is great to have, especially in this area in Knox Henderson. You can use it as a rental. You can use it as a mother-in-law suite, or you can use it for a SMU student who wants to rent and
That's a plug to all
needs to
our
go
ponies out there.
pony up.
Pony up.
Yeah. You gotta represent.
Yeah, but the house was gorgeous. I mean, it had
5 beds, right?
5 bedrooms, a game room, a pool, updated kitchen.
Yeah. Very spacious.
Very spacious, a garage. So it was a really nice home. And the location was amazing.
It sure is.
I mean, around the corner from Velvet Taco. I don't know
Yeah.
if you've been there
I've
or
been
not,
there.
or if
That's
y'all
a
been
Velvet
there,
Taco plug.
you should go. So right around the corner from Velvet Taco, and a lot of the other restaurants and bars and shopping right there on Henderson. So great location.
You know what I liked about the home as well? So many times in that area we see some craftsmen, but a lot are tutors. This had a very traditional elevation to it.
Yeah.
It looked straight out of a Texas magazine. This
Very
is a
Texas
Texan.
home.
Yes.
It had a very Texan influence to it, which I thought was interesting in that neighborhood.
Yeah.
Where it was priced at 1.95, and it had a different, elevation to it, so it stood out
Definitely.
among other homes.
Yeah, definitely stood out. Speaking of price, 1.95.
1.95.
That is heavy. It's heavy. And that was hard pulling comps because there are not a lot in that neighborhood, just really within a 2-mile radius,
Right.
that really were comparable.
Now, we've seen, obviously, homes in that neighborhood eclipse $1 million and go up there, but where Goodwin was priced at was a little, I think, heavy currently.
In our opinion, yes.
I don't remember the days on market, but I wouldn't be surprised if it had been sitting there for a little bit.
Yeah. So as far as price, Ron,
Yeah.
how would somebody go about getting a loan almost $2 million? Well, not $2 million, but
Right, for
a
buying
very
a
high loan, $2 million
almost
property.
$2 million property. So first of all, I think the biggest challenge when I looked at that report with the comparative market analysis was the closest sold price was 1.28.
Yeah.
Right. So in lending, we're looking at a going back within the past 3 months, 6 months, but going back further than that, that's not necessarily good data.
Yeah.
Right. We're also looking for a similar floor plan. We're looking for similar age of the property. And when I'm looking at those comps, now there was a pending sale, right, that was at 1.475.
1.4, yeah.
And I've done that before. I've actually called the listing agent on a different property for one of my clients, and I said, okay, when are you closing? And they said, we're closing in 30 days. I'm like, we're going to order another appraisal, right? So, and use it as a comp.
Yeah, appraisal.
Right? So, but in a home that appraises for 1.475, that's not going to get us to 1.95, right? I wouldn't see this would be an issue if it was in the Park Cities area, right? But I do see it as a challenge here, and that could be one of those reasons. So really, that buyer, they're either going to fall in love with that home, and they're going to have a lot of money to be able to put up, so that it does actually, they don't have to worry about that appraisal issue, right? Because if you're trying to meet the minimum with a lot of jumbo lenders, it's 20%, especially at this price point, right? That could be a challenge, So that's the first thing. The good news is, I would say, and I cracked my voice on that, at 1.95, so now we're looking at a loan amount that's more like 1.9 purchase price, but at 1.5 loan amount. Now we're getting into I've actually set up a commission cap. Right, where I have actually capped my personal commission that I receive on deals at $700,000 at that price point. So what happens is, if the rate, let's say it's at 3.25, and then all of a sudden I look at that commission cap based off of the 1.5, now the rate might be like a 3%, right? So I'm passing the savings, right? So, and the reason why is because that's my clients, right? So I want to capture those bigger volume clients.
Yeah, and I like what you said. I think that the person that buys that home is going to have to really love that home, especially at that price point in this area.
I agree. I fully agree. Because I don't think we would have told them to price it at that number, but
I don't think so. But that's not my listing. But
not yet.
Not yet.
Not yet. Owners of Goodwin, if you're watching this, we can get it done. Okay, so the last one was Euclid. And I really liked Euclid. Not only because of the price point, and we serve a lot of buyers at that price point, but the location. Smack dab in the middle of Lower Greenville and Henderson.
Yes.
Man, you cannot beat that location.
I mean, you can literally get to Henderson in less than a minute, get to Greenville in probably the same time, less than 30 seconds. You've got Trader Joe's over there. Sprouts, La La Land, coffee. You got the laboratory, Green Ave Pizza Co. So, I mean, it is really in an amazing location.
And the home itself. So we've seen one very traditional like Goodwin.
Yeah.
We've seen the Tudor like Macama's, but Euclid was a 3-story condo.
Yes, condo townhome.
Condo townhome. What's the difference there?
So with a condo versus a townhome, in a townhome you actually own the dirt underneath you. It's more like a single family home, but it is still attached. With a condo, you just own foundation up.
Interesting.
Yeah, so that's, yes you did. So that's the difference for all you guys out there watching. But yes, it's a 3-story townhome. We do a lot of our business with townhomes. A lot of our first-time buyers love townhomes.
Well, it's priced at $595.
It's priced at $595, which I still think was a little heavy.
You did.
It's
I mean, you ran the comps, and they were almost 100,000.
Yeah, over. And then
where
even where I thought it should be priced, and then their neighbors in that same row were just sold recently for a lower price. So I get that it's an in unit, you're only sharing one wall, you've got a bigger yard, you've got more windows and light and things like that, but if we're still talking about finishes, square footage, floor plan, style, size, it is on the heavier side of the price.
That's good to know.
Yeah.
So speaking of this price point, $595, Ron, we spoke, and your points were that it basically fit nicely in, I guess, the products that you guys would offer, or.
Yeah, especially given the higher conforming loan limits, right? So if you were thinking about it before, I don't have my calculator in front of me, but you might have to put down more than 5%, right? When it was at 548 in terms of the loan amount. But at $595, if the conforming loan limit is $625, you can meet the minimum standard, right? And if you have that extra money in case it doesn't appraise, which it might, because we looked at those comps that sold for $100,000 less, then you might have that ability to put that extra money into the transaction, or be able to have a little bit more negotiating room, if that's what you were looking for. The key with condo financing is it's a little different than standard, right? Because again, we talk about risk, right? So the investor, you know, on a single family home, they're looking at that particular home and they're saying, okay, so, you know, whatever happens inside that home, it's really just the homeowners, right? In addition to, you know, acts of God and everything else. But at a condo, you got all the neighbors around you.
All the neighbors
right?
you have to worry about.
And they affect the, you know, the livability and the asset. Right? Because at the end of the day, I mean, you put 10% down and you say, yes, we're homeowners. Guess what? Bank owns 90%. They want their money. They want their asset protected for now until you pay it off and get the red door, right?
Yes.
But that's what's really important, right? So you've got to think of it, you know, from that standpoint. And as lenders, we send that actually through a condo review, right? So we're looking at the HOA documentation, we're looking at the CC&Rs, we're looking at all that paperwork. And fortunately, we've got a very speedy team that just goes through all that, makes sure that we check all the right boxes. We have the very you know, minimum checklists, and then we're good. Right.
And it is a lot of paperwork.
It is.
Those CCRs, those condo docs get very
hefty.
Absolutely.
Okay, so we've 3 great properties, 3 different neighborhoods within 75206.
Yes.
What's your favorite? I'll go with you, Ron.
I actually like McComas the most.
Okay.
Yeah. You know, because ever since moving to Dallas, everyone talks about the M Streets, like that's the coveted area. I think there's a lot of room for growth there. You could do a lot of renovations. I like the attractive price point. So my bet is McComas.
And they have great school district.
Yes.
He's a tutor man.
He's a tutor man.
Yeah, absolutely.
Alex?
So my favorite is probably Euclid.
Okay.
Only because it is similar to the style of home that we're in now. It's got a balcony, which we don't have now, so I want the balcony. It's got a great size yard. It's gated. The location, literally,
That's enough.
It's really enough, and it's all the space that we need now. So I think, and just the style, it's a little bit more modern. It's got great finishes, great appliances. So yeah, that's my favorite. What's your favorite?
I'm gonna throw a curveball here. I'm going McComas as well.
What?
I am. I'm going.
Are you a tutor man?
I could be a tutor man, guys. This is a first. We're getting this on camera. This is a first.
I'm a little shocked.
I'm a little shocked as well. But, you know, I did like Euclid. It's very modern, just like ours. I mean, ours was built last year. So that style, we can resonate. We understand that style of living, right? But as you and I, you know, continue our life, we're thinking what our next home might be. And we really don't want to leave the neighborhood. No. We love living in 75206. We cannot say anything.
We always talk about where are we gonna go next, and dang, we just really can't come up with any place that's better right now. So that's affordable.
Affordable. I thought McComas was a great price point for us to jump into next. And I just see the resale being over right there in M Streets. It is never going to go out of style. And I really liked the home. It was spacious. There were some things that would change.
I can agree.
But I think I'm a tutor man. I'm with Ron on this. I'm a tutor man.
We got tutor mans over here, tutor men.
You guys let us know. Drop a comment. Let us know what your favorite was of the 3.
What's your favorite?
If you want to buy one, I know 2 people who can help you. And I say a 3rd person who can help you get into the home as well. So let us know which one was your favorite. Guys, as we wrap this up, this has been awesome.
It's been fun.
This is so fun.
Ron, thank you for coming on the show.
Absolutely, my pleasure.
Coming on our show.
Thanks for having me.
Yeah, of course. Yeah. So you guys make sure you go watch all of our neighborhood tour videos, like I said earlier, and then let us know what you think. Roger that.